Hey traders, Jason here from Lever Brothers. So in this video, I'm going to talk about going short with some technical indicators. Okay, it's not hard, not complicated. You certainly don't have to get too tied up in the weeds, so to speak. Most decisions are made because the market is weak, and then you're zooming in with technical indicators just to fine-tune your entry. But you're not making a decision from those shorter time frames. You're making decisions from the bigger time frames, and you're zooming in just to get an entry. Okay, because the reality is, if the market is weak, you can use almost any entry technique and make money on the short side. Same thing going long. Okay, it's like I don't find signals and then determine and then decide to go long or short. I get a signal from the bigger picture, and then I just zoom in just to fine-tune the entries. All right, so generally speaking, what I'm looking for here, I'm just going to try and draw this, is that typically you'll have a stock that's going up, and then I want a big enough move down that causes a lot of indicators to break support levels, indicators to cycle down, indicators to break trend lines, indicators to suggest that the uptrend is over. Then I want to bounce within the newly forming downtrend. Then that bounce is going to get rejected by a moving average, and you're going to get some technical indicators that try to move up, but they don't move up very much. And then that bounce will eventually fail, and then the downtrend will continue. I never get the first move. Okay, I don't get this because it usually happens pretty suddenly, and I'm not really paying attention. I mean, heck, this stock's doing well. It's trending up. But after that first move happens, then I zoom in and I start to look for a second move. So let's go through a couple of examples here. Not want to get too heavy here. Just give you some ideas. All right, let's get into it. All right, so here's IONQ. This is a stock that we played alongside several times. Came out of a base here, consolidate here. This is the weekly chart. Consolidate and move up here. Really, really big mover for us. But let's zoom in, see what we got here. So what we have here is we have a big move down here, okay? And what happened during that big move there is that you had RSI break support there, okay, as you can see. But MACD is still doing well, but stochastic broke down. I should probably label these as like RSI up top, MACD, stochastic. Okay, so we got a pretty good move down here that crosses that and then causes the stochastic to break a support level 2. Then we get one more bounce, but during that bounce, we get negative divergence here, we get a negative divergence here, we get a negative divergence here. This crosses. Okay, so that we're getting a lot of negative signals as the weekly chart moves up to a higher high. Then we get another big move down. Okay, and then it's this move here that I'm going to look to short. Now, I actually was looking to go long here because the market at this point was bouncing and it looking pretty good. Okay, but this is a weekly chart. So over the course of a couple weeks, at first it looked like a long, but then it started looking like a short. So I'm going to zoom in here. We got a bounce here from like 13 up to like mid 16s. I'm going to zoom in with a closer chart to find an entry. All right, so here we have. This is the hourly chart. This is the bounce here from 13 to 16.5. There's 13, there's 16.5. So what we have here is we have, and you can see the progress here where it breaks support here, the RSI breaks support here, then it bounces, and then we get another trend line forms, and it breaks support here. We have MACD crosses down here, and there's a failure to cross up here, and there's a cross down here. So we got a cross here, we get the kiss here, we get a break of support here, all at the same time that the entire like rising wedge here breaks support. So there's an example of a short entry of a stock that had broken down on the weekly chart, but then I zoom in with 60-minute chart to find an entry. All right, here's BLDR. So once again, we have lots of support here from the 21. You can see it breaks down. That's a big move down here. During that move down there, we get RSI breaks down from a shelf there. We get MACD breaks down there. So lots of things, on this move down here, we get a lot of things that break. That breaks, that breaks. Then we got this bounce within the newly formed downtrend. Okay. breaks again, then another little bounce within a newly formed downtrend, and then we continue down from there. So let's zoom in with an intraday chart to look for entries. Okay, I mean, the entries are here. We make a decision on the daily chart, on the longer term chart. So you got a support there. We got failure to cross, to make any upside headway there. Stochastic can't even bounce. Lots of stuff there. So here is zooming in on that area. That little flag pattern that I highlighted was just this. Okay, big move down there. So then we get a little flag pattern that breaks down. RSI breaks support. MAC crosses up and then crosses back down here. We get negative divergence here, cross down. So again, you might look at this and say, oh, those are just coincidence. That of course that happened. The stock was falling, so of course everything broke down. But the decision is made on the daily chart. Like, I'm looking for a way to get short. So like, I knew this entire time here, I'm looking to get short. I'm looking to get short. I'm looking to get short. And then you can see where like this breaks down. Negative divergence here, cross here. It's like things are starting to line up, and then you time that when the market's not doing that well, and you're just trying to get a decent entry. Because again, if the bigger picture is weak, you don't need to get perfect entries. Okay, a lot of people like want to have every single box checked, and you don't want to do that. All right, so here's KB Home. Home builders did really well. Then they started not doing well. You can see how we got support from the 21, but support from the 8, 8, 8, 8. So eventually we got a decent move down here, then a bounce, and then a continuation. Okay, so while that's playing out, we have a negative divergence here, then a cross. We got negative divergence here, and we got a trend line that gets taken out here. We get a shelf that is built here, and then a cross down here. So a lot of things are lining up like right around here. So let's zoom in. This is the weekly chart. Let's zoom in on this area here, this bounce, and look for an entry. So here is the daily chart. Okay, this is one of my favorite things to look for. You get support from the 50, support from the 50, support from the 50. It breaks down twice. It gets rejected by the 50 there and there, and then it continues down. So, and you get a little bit of help. You get the RSI breaks the support level here, drops, moves up, but then moves down again. You get the MACD, which crosses down over here, and then fails to, it crosses back up, and then immediately crosses back down. You get the stochastic, which cycles up and then crosses back down. So everything I need to know is like right here, because it breaks down, tries to move up a couple times, and then starts pulling back off that moving average. And then you can zoom in with the indicators just to kind of fine tune an entry. Okay, but again, if you don't want to be too cute with the entry, because if the overall trend is down, you want to just get in at the best place you can without being too cute, because if you're too cute, you're probably going to miss a lot of trades. Here is IONQ. So stock breaks down there, forms a little flag pattern over here, and as you can see, it breaks down again. So breaks a support level here. You get the RSI, forms a little shelf there. We get a break there. You have the MACD, which is trending down over here. We get a failed kiss there. We get the RSI, cycles up, and we get a cross there. So we get a cross there, we get a kiss there, we get a trend line break there, all while this stock is breaking down from a top. It flags for almost 2 weeks and then continues down from there. Here's Sunrun. Solar stocks have been weak for a long time. Probably the weakest group, if not the weakest group, it's certainly one of the weakest groups. So it broke down here. There's your bounce. Gets rejected a couple times over the course of a week by the 21-day moving average, and then it continues down over there. So let's zoom into this area over there. Okay, you can see the area bounces up here, gets some support from the 50, but then loses it. Okay, so we have a little bit of a shelf here, so it breaks down there. MACD tries to cross up, but immediately crosses back down. Stochastic cycles up and then cycles back down, all while this farms support just above 11, and then so it breaks the support level, the price support level, breaks the 50 moving average on the 2-hour chart, and it continues down from there. Okay, but again, the decision to go short is made on the higher time frame, and I'm just zooming in on this just to figure out, just to get a little bit better entry. Okay, nothing fancy here. If the market's weak, don't be too cute. Look for a bounce within an uptrend or a bounce within a downtrend that gets rejected by a key moving average. When it bounces, indicators will cycle up. They'll form a little bit of a shelf. They'll form like a little bit of a trend line. When those trend lines get broken out, then we get a continuation to the downside. I hope this helps. We'll see you next time.